welcome to Talking Technicals. On the show today, we will look at broader market action and its impact on individual stocks. Now, we all know that a sinking ship takes everything down along with itself, and is this true for our markets as well? And actually, how do you figure out when to catch that proverbial falling knife? When have the markets truly bottomed out? Of course, our show expert, Dr. C.K. Narayan, will help us figure all this out as we go along. So let's start out by trying to understand capitulation. So what does capitulation mean? By definition, actually, it really means to surrender or to give up. So when investors actually give up all hope on a stock moving up and sell in despair, we see an amplified price decline with high volumes. And this typically signifies the rock bottom price for that stock, because beyond this point, essentially, there are no more sellers left in the market, and any buying action henceforth will only take the price up. Now, while with lots of other things, it's easy to explain this away in theory, it's very, very difficult to spot it on the charts with foresight. Isn't that right, Doc?
Yes, indeed it is. While capitulation is a common feature in our markets, it's very, very difficult to forecast when and where the capitulation will actually occur. We do get hints of it every now and then from the charts that there is something wrong, but we'll never ever get the precise, where it will happen. Now, a very good case and example would be something like when the bad news hit in Satyam. So, if you look at the chart of Satyam, then what you will see is, a move like this, which is like a waterfall decline, right? This is just something which is caving in. And this is when the news hit about all their sets of problems and what are the shenanigans that the directors were up to. So, every time a capitulation will always be accompanied by some news or an event. That has to be there, and that is when people at large, they realize that there is something wrong, and then they all join the selling bandwagon, and the whole thing caves in like this. It's very difficult to forecast out here that such a move is in the offing, but when it happens, there are ways and means to catch it.
Because there are three lows that you can see. Essentially, there are three long candles, red candlesticks, which are showing the decline at 3 points.
Yes.
So how do you know that the last one is the final one? That's the question, right?
We will, if you recall, we spoke about the long-range bars in the last set of episodes. You will find that whenever there is trader-investor capitulation, which will be both on the upside as well as on the downside, you will always get those long-range bars, and these long-range bars in particular will be accompanied by very heavy volume, and that is how you know that a capitulation is actually coming to an end. So the long-range bars which we spoke about in the last episode are extremely useful in the context of this market capitulation.
Right. Interesting chart. We'll talk more about capitulation as we go along, but we've seen our broader markets move. We've seen the Nifty, and we've seen many, many bottoms form over time, and many times when we've actually seen capitulation. So which would be the points on the Nifty long-term chart you would pick to highlight capitulation, and what indicators would be seen therein?
Okay, let's take it in sets in the way that you have asked it. Let's look at the Nifty in about 2008, when we had the actual set of capitulation going on. Now, if you look at the chart here, what you will find is that there were two sets of declines, right? There was this earlier decline, which was about May to July, and then there was this huge decline when everybody just gave up. This is when the news hit about Lehman Brothers default and all that. So that is, see, if you look at this and you look at the slope of this is a much sharper kind of decline. And if you notice here at the bottom in June, July, you do not really have those long-range bars which signal the end of capitulation. But contrast that at the end, when you saw it at the end of 2008, that is when you have those really long-range bars. And long-range bars are the typical end of a capitulation. So even though these were large sell-offs of similar dimension, but then the real one where everybody abandoned their show was out here. So
and
that is where you'll get it.
This is a weekly chart?
No, this is a daily chart I'm showing you of the fall during 2008.
But really, I mean, in hindsight, it's much easier to forecast. It's 6x6 vision, right? How many of your friends forecasted this one, the January bottom that we saw in 2008?
Why should we talk about my friends? I can talk about myself, right? It was not very difficult to forecast that we were at a stretched situation. But whether it could be forecasted down to 27th of the month, October, that is debatable. But then, okay, it's all right if you didn't know it on the 27th October. If you knew it by the 1st of November that this phase is over, that itself would have been enough. And I think a lot of people concentrated on the market were able to catch that.
So the next classic question which everybody asks is that when you see such capitulation, you always have at the back of your mind that you're getting stocks at a really good bargain price, and you're really tempted to go in. But then again, is the, you know, as we spoke about, the proverbial falling knife, is that you don't want to get cut by it, as in you don't know that it's already capitulation. So what are the indicators that you would use at that point to decide whether you want to start bottom nibbling, whether you want to start buying or not?
I think, see, when you're talking about the markets undergoing any kind of sustained selling or buying, you're really talking about increased momentum there. So I think the best thing to use at that point of time would be momentum indicators. We have talked about RSI, we have talked about MACD, etc. So let me show you on the chart. Very typically what you will find is this is the 2008 thing again, all over again, right? And this is when it actually hit the major bottom. Subsequently, it did spend a little bit of, moving sideways. During that period, you will actually find that your RSI or even your MACD, etc., forming some sort of divergence patterns, putting in higher bottoms, showing you a range shift. Various things will actually happen with the momentum indicators. At the end of the capitulation, the momentum actually reduces, and these are captured very well by the momentum indicators.
Looking at the lows on your RSI or on the ADX line to see that those lows are going, it's higher lows.
Yes, or you could say maybe shift to an MACD, and in the MACD also you will actually find something fairly similar. You have the market actually doing the capitulation part here, but somewhere where I have marked out this arrow here, that is where your MACD line cuts the trigger line. When you are so deep into the oversold, when it goes above the trigger line, that is where you actually square out your shorts. And here is where the MACD line actually goes above the positive, into the positive, above the zero line, and that is where you actually initiate a buy. This is also the point where you are crossing the previous set of resistances. So everything comes in line there. So you can use momentum indicators to really spot the end of capitulation, the onset of the new trend as well.
Okay then, time for a break right now, and we leave you with a question as always. So the question is market capitulation. What does it signify? Does it signify time to option A, buy into the market? Option B is sell all existing positions. Option C is stay on the sidelines and wait and watch. And option D is start to build positions slowly. So that's 4 options for you to think about and see which one you would pick for market capitulation. We'll tell you when we come back in a little bit.